Preparing for a financial analyst at Humana interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about yourself and why you want to work as a financial analyst at Humana. I have built my experience around analyzing financial data, explaining variances, and turning detailed information into practical recommendations. Humana interests me because healthcare finance directly affects affordability, access, and member outcomes, while the company has deep expertise in Medicare Advantage. I would bring strong Excel and modeling skills, attention to detail, and a collaborative style. I am especially motivated by the opportunity to help business leaders make disciplined decisions in a complex, regulated industry. While answering, connect your analytical background, healthcare interest, communication skills, and motivation for Humana's Medicare-focused business. Show how your experience supports accurate forecasting, decision support, and member-centered financial outcomes. Question 2. What do you know about Humana's business model? Humana is primarily a health and well-being company with a significant focus on Medicare Advantage, serving older adults through government-sponsored insurance products. It earns premium revenue and manages healthcare costs, administrative expenses, quality measures, and regulatory requirements. The company also has capabilities in healthcare services and pharmacy-related offerings. From an analyst's perspective, profitability depends on enrollment, risk-adjusted premiums, medical utilization, provider economics, operating efficiency, and disciplined capital management. Make sure to cover Humana's concentration in Medicare Advantage, insurance premiums, government programs, healthcare services, medical costs, administrative expenses, regulation, and the importance of managing quality alongside profitability. Question 3. What financial metrics would you monitor at Humana? I would monitor membership growth, premium revenue, medical loss ratio, administrative expense ratio, operating income, cash flow, risk adjustment, utilization trends, and reserve development. I would also track enrollment mix, quality-related economics, capital levels, and actual results against guidance. The important point is to interpret relationships, not isolated metrics. For example, rising membership may look positive, but unfavorable risk mix or higher utilization can pressure margins. I would investigate the driver behind every material movement. In your answer, discuss revenue, membership, medical loss ratio, administrative expense ratio, operating income, risk adjustment, utilization, reserve development, cash flow, and capital adequacy, explaining how each supports management decisions. Question 4. How would you explain the medical loss ratio to a non-finance leader? The medical loss ratio, or MLR, measures medical claims and related healthcare costs as a percentage of premium revenue. If MLR is 85%, approximately 85 cents of each premium dollar supports medical care, before administrative expenses and profit. A higher MLR can reflect increased utilization, unfavorable risk, or pricing pressure. A lower ratio may indicate favorable trends but deserves validation. I would analyze it by product, geography, membership cohort, and period to identify the underlying cause. Be sure to mention the definition, medical claims relative to premium revenue, interpretation of increases and decreases, regulatory context, and why analysts should distinguish temporary utilization changes from structural profitability issues. Question 5. How would you forecast revenue for a Medicare Advantage business? I would build revenue from operational drivers rather than applying a simple growth rate. The model would forecast members by market and product, monthly premium rates, risk adjustment effects, benefit changes, seasonality, and expected enrollment movement. I would reconcile the forecast to historical actuals and incorporate known policy or reimbursement changes. Then I would create sensitivities for membership, risk scores, and rate assumptions, so management can see which variables create the greatest earnings risk. Focus on membership, premium rates, risk adjustment, benefit changes, seasonality, geographic mix, enrollment assumptions, policy changes, and sensitivity analysis. Explain how you would reconcile operational drivers to reported revenue. Question 6. How would you forecast medical expenses and claims? I would forecast medical expense using membership, utilization, unit cost, benefit design, provider trends, and historical seasonality. For recent periods, I would apply completion factors to estimate incurred but not reported claims and review whether emerging data supports changing those assumptions. I would segment results by service category, geography, and product where possible. A credible forecast should explain both volume and price effects, then compare actual emergence with prior assumptions to improve future estimates. In your answer, cover membership, utilization, unit cost, completion factors, incurred but not reported claims, seasonality, provider trends, benefit design, and the distinction between timing noise and durable cost changes. Question 7. What is incurred but not reported, or IBNR, and why does it matter? IBNR represents healthcare services that have already occurred but have not yet been reported or processed. Because claims arrive with a delay, Humana must estimate the liability using historical payment patterns, completion factors, current utilization, and actuarial judgment. Underestimating IBNR can overstate earnings and create unfavorable future development. Overestimating it can depress current results. I would monitor reserve emergence by service period and compare actual claims development with the original estimate. Make sure to explain IBNR claims, reserving estimates, lagged submissions, completion factors, reserve development, earnings volatility, actuarial partnership, and the consequences of underestimating or overestimating liabilities. Question 8. Describe how you would perform a monthly actual versus budget variance analysis. I would first validate the data, confirm the reporting period, and identify material variances against budget and prior forecast. Then I would bridge the result using drivers such as membership, rate, utilization, unit cost, staffing, and timing. I would discuss unusual items with business owners, separate recurring trends from one-time events, and quantify the impact on the full-year outlook. Finally, I would summarize the cause, risk, and recommended action in a concise management report. Discuss data validation, materiality thresholds, revenue and cost bridges, volume price mix analysis, root cause investigation, business owner discussions, forecast updates, and concise communication of actions. Question 9. How would you analyze an unfavorable increase in medical costs? I would decompose the increase into membership, utilization, unit cost, mix, and timing effects. I would examine inpatient, outpatient, pharmacy, physician, and supplemental categories by market and product, then compare trends with benchmarks and prior periods. I would also test whether higher costs reflect risk score changes, provider pricing, coding, seasonality, or delayed claims. After validating the cause, I would update the forecast and recommend actions such as utilization management, contract review, or benefit redesign. Focus on decomposition by utilization, unit cost, membership mix, service category, geography, provider, seasonality, risk adjustment, data quality, and management actions before concluding that pricing or operations failed. Question 10. What is risk adjustment, and how can it affect Humana's financial results? Risk adjustment modifies payments to reflect the expected healthcare needs of enrolled members. Members with greater documented health complexity generally generate higher risk-adjusted reimbursement, so accurate clinical documentation and coding can materially affect premium revenue. I would treat risk adjustment as both a financial and compliance issue. Estimates require careful monitoring, timing can create volatility, and unsupported coding creates regulatory risk. In forecasting, I would model current year performance, submission timing, policy changes, and uncertainty explicitly. Be sure to cover the relationship between member health status and premiums, coding accuracy, documentation, reimbursement timing, forecast uncertainty, compliance, and the difference between legitimate risk capture and inappropriate coding. Question 11. How do the three financial statements connect in an insurance company? Premium revenue and medical expenses flow through the income statement, while unpaid claims appear as liabilities on the balance sheet. Cash flow differs because premiums may be collected before claims are paid, and investment activity affects liquidity and earnings depending on classification. For example, higher incurred claims reduce earnings and increase reserves immediately, but cash payments may occur later. I would always reconcile earnings to operating cash flow and investigate movements in reserves, receivables, and investments. In your answer, link the income statement, balance sheet, cash flow statement, premiums, claims reserves, investments, receivables, payables, and non-cash items, using an insurance-specific example. Question 12. How would you evaluate whether a healthcare initiative is financially worthwhile? I would define the initiative's baseline and quantify incremental members, premium revenue, medical cost savings, administrative expense, technology investment, and implementation timing. I would calculate contribution margin, ROI, and payback, while testing assumptions under conservative, base, and upside scenarios. Because Humana operates in a regulated healthcare environment, I would also consider quality, compliance, member experience, and execution risk. A financially attractive project is strongest when its savings are measurable and its outcomes are sustainable. Discuss incremental revenue, medical cost impact, implementation expense, member outcomes, regulatory considerations, timing, ROI, payback, scenario analysis, and risks that cannot be captured through a simple margin calculation. Question 13. Tell me about a time you found an error in financial data. In a previous reporting cycle, I noticed that a department's expense variance was unusually favorable compared with its staffing trend. I traced the issue to a missing accrual caused by an incorrect reporting filter, confirmed the amount with the accounting team, and corrected the analysis before distribution. I communicated the impact clearly, documented the root cause, and added a validation check comparing headcount, payroll, and expense trends. That experience reinforced the value of reasonableness testing. Make sure to structure the response with situation, investigation, root cause, correction, communication, control improvement, and measurable impact. Emphasize professional skepticism without blaming colleagues. Question 14. How do you ensure accuracy when working with large datasets? I begin by confirming the source, period, definitions, and expected population. I use controlled transformations, reconcile totals to the general ledger or approved source reports, check duplicates and missing values, and perform reasonableness tests against historical trends. I preserve a documented audit trail, separate raw data from calculations, and avoid overwriting source files. Before delivery, I review formulas and key outputs independently, because a polished dashboard is not useful if its underlying data is unreliable. Cover source validation, reconciliations, data definitions, controlled transformations, duplicate checks, reasonableness tests, documentation, version control, and independent review before distributing management reporting. Question 15. Which Excel or analytical tools do you use most effectively? I use pivot tables, XLOOKUP, SUMIFs, logical formulas, charts, and scenario tables regularly. For larger datasets, I prefer Power Query or SQL to standardize and combine source files before analysis, reducing manual manipulation. I build models with clearly separated inputs, calculations, and outputs, and use checks for balance and completeness. I also focus on presentation. A concise bridge or dashboard should make the business driver visible, not merely display a large volume of numbers. Mention specific tools such as pivot tables, XLOOKUP, SUMIFs, Power Query, charts, scenario models, SQL, or visualization platforms, while connecting each capability to speed, accuracy, and decision usefulness. Question 16. How would you communicate a complex financial result to a non-finance executive? I would lead with the conclusion and quantify the financial impact before explaining the mechanics. For example, I might say that margin is below plan by $20 million, primarily because utilization is higher in two markets, with a partial offset from favorable administrative spending. I would distinguish confirmed results from estimates, explain the full-year implication, and present a recommended action. Executives need clarity on what happened, why it matters, and what decision is required. In your answer, emphasize leading with the conclusion, using plain language, quantifying impact, separating facts from assumptions, explaining drivers, highlighting risks, and recommending a specific action. Question 17. Describe a time you had to meet a tight deadline with incomplete information. During a short reporting deadline, several cost files arrived late and did not reconcile perfectly. I prioritized the material accounts, used the latest validated run rate for smaller items, documented assumptions, and flagged the uncertainty to my manager before distributing the preliminary view. I completed targeted reasonableness checks and replaced estimates as soon as the final data arrived. This approach delivered a useful decision-ready analysis without presenting assumptions as confirmed facts. Focus on prioritization, transparent assumptions, stakeholder communication, materiality, interim analysis, quality controls, and how you updated the result when better information became available. Question 18. How would you approach a forecast when the business environment is changing rapidly? I would move from a static budget mindset to a driver-based rolling forecast. I would identify the variables most exposed to change, such as membership, utilization, reimbursement, provider costs, and labor, then create base, downside, and upside cases. Each assumption would have an owner, source, and update cadence. I would establish trigger points for revising the outlook and communicate changes early, so leadership can act before a variance becomes a larger earnings problem. Discuss driver-based modeling, rolling forecasts, scenario analysis, external indicators, sensitivity testing, assumption ownership, trigger points, and frequent communication rather than relying on a static annual budget. Question 19. How would you handle a disagreement with an actuary, accountant, or business partner about a forecast assumption? I would first clarify whether we disagree about the data, methodology, timing, or judgment involved. I would review the supporting evidence with the stakeholder, compare the assumption with historical experience and current indicators, and quantify the impact of each view. If uncertainty remained, I would present sensitivities rather than force false precision. I would involve the appropriate manager or subject matter expert when necessary and document the final rationale so the forecast remains transparent. Be sure to mention listening, defining the disputed metric, reviewing evidence, reconciling assumptions, using sensitivity analysis, escalating appropriately, documenting the decision, and preserving cross-functional trust. Question 20. Why should Humana hire you for this financial analyst role? Humana should hire me because I combine analytical discipline with the ability to communicate clearly and take ownership of the result. I can build reliable models, investigate variances, and explain what the numbers mean for operations and strategy. I am also comfortable asking thoughtful questions when healthcare-specific assumptions require deeper understanding. Most importantly, I would bring an accuracy-first mindset, collaborative behavior, and genuine interest in supporting sustainable growth and better member outcomes. Summarize analytical discipline, healthcare curiosity, technical skills, accuracy, communication, collaboration, ownership, and the ability to translate financial information into decisions that support profitable growth and better member outcomes. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.